So today we'll check out on the PNC INFRATECH, which is like uh, good opportunity to buy PNC INFRATECH as per the uh, no as per the screener. PNC INFRATECH is basically into national highway building across the country, where it has mostly into infra development. So let's go and check out like what exactly it's how are they the financials, and then how are those fundamentals and all those things. So basically, before seeing this, you are good at you can figure out that uh, it has been almost like came near to the previous resistance, and now it has been taken support at the monthly chart, and it has fallen quite significantly. Uh, you can like you can invest here itself, or you can wait until it comes near to the uh, monthly 50 moving average. But I to track the stock, I generally invest like 10 stocks, and then I would start tracking. If it goes up, I do averaging on the upper side, so that I would be in the safer hands. And if it comes down, I would average near to the moving average, because uh, its fundamentals are good. Only my only concern is like debt to equity. Other than that, the order books and everything is good. This is the right time to invest around 240 to 256. Uh, yeah. So let's go and look at the fundamentals of the company, because it has already fallen almost 70%, 60 to 60%. So it would be it's like quite phenomenal fall. But for this company, uh, for a short term, for a short term around 2 to 3 months, this might give possibility good result. So let's go to the fundamentals. Like it's what is this company into? So PNC Infra is like what are their projects? So generally, these are they are into the highway projects, like the road construction and toll gates and all those things, which is like generally this kind of infra project developers has debt, because they get the returns over the long term. And let's see the overall completed projects. They are mainly concentrated in Madhya Pradesh and Uttar Pradesh and Rajasthan, uh, and here and there like Karnataka, Tamil Nadu, small portion, that's it. So mostly they are into highway construction, and some of the uh, uh, airport road construction basically. So Tamil Nadu, mostly they are concentrated in the middle of the country, but here and there they are getting the projects as and when, like when they get the opportunity, they are going outside and exploring in the other states. Their stronghold is in Uttar Pradesh and Maharashtra and Rajasthan. So these basically this is the outline. Flyovers and power transmission lines, all they are into multiple things. So basically it's completely infra. So it has good ROC, return on capital employed, and return on equity. Uh, and its book value is quite good. I mean, for the price which we have, it's like price to book value is two around, not even two, less than two. And stock P is less than 10, and earnings per share is 27 rupees per share. And it has high debt because it's into infra. Uh, Apart from that, so this is overview. Basically, it's fine. Uh, Return on assets is like 5%, which is also fine. Let's go into a little deeper. P of the stock, like earnings are more now, and but the price is around. I mean, price to earnings is like 10. which is like good opportunity to buy at this level, because it is it looks like it's going to pull back, uh, over the time of 1 year period. So you cannot expect the returns immediately, or like the minimum time duration for return is 1 year, 9 to 1 year, 9 months to 1 year. And so yeah, so price to book value is also good, and market cap to sales is also good. So as per the technical, I mean technicals, it's fundamentals also it's fine. Technicals, it's right opportunity as per the. So yeah, it's into construction business. So if you see this, right, there are multiple companies, but if you see the sales growth over the last 3 to 5 years, and operation profit margin, the earnings per share is highest, uh, mapped with it is matching with the almost like market leader, macrotech developers, and it is available at the cheaper price, and market cap is comes into small cap, but fine, you have a lot of scope to increase if you are in small cap and mid cap, but remember there will be a lot of volatility as well. If you have the capability to handle it, uh, you take the decision as per your risk appetite. And return on equity and industry P is 38, but here P is like discounted one. uh, so promoter holding is also good. So it doesn't look to me bothering numbers, but the only concern is debt to equity for me. Now let's see the quarterly results. Like June quarter 2020, they're almost 1,000 crores, and next year June it's like one 1,463 crores, where it's like 30% growth. And now from 21 to 22 June, it's like more than 30% growth. So operating profit is also being grown. That is fine. It's good actually for a company. So net profit is, uh, if you see the net profit, how I would think is like, people say that market estimates and all those things, but I would see the net profit over the long run. Like, is it having the negative numbers generally over uh, it says that over the long run the company is going to profit. Okay. And now if you see the consolidated profit and loss statement, the company has grown almost 7 times over the 10 years, 10 to 12 years. It has grown almost 7 times, and profit has grown around more than 10 times. Operating profit, earnings before interest tax, it's just operating profit. So this is quite good actually, and they are paying high interest. Okay. uh, yeah, they are paying high interest because they have debt, and overall the profit before tax is also growing, which is good for a company. And net profit is also growing. So as an investor, we need only the net profits. So one thing to remember all the time is, like, when there are revenues growing frequently, and when there are operating profits growing frequently, and I mean consistently, but the price has been fallen. So this is the right opportunity, because the market is at all time high. I mean, the fundamentals are saying it is, the profits are at all time high, but the stock price is not at the all time high. Then this is the safest bet I could make, because uh, defaulting by this company is it doesn't look to me like going to happen yearly. Um, so return on equity is also fine. It's like 17%, which is like good. And if you see, only the stock price has been staggering here and there. Uh, but return on equity and the computed sales, if you see the sales and profit growth, it's quite good actually. So it might become a multi-bagger as well in the long run. But my tenure to invest is almost in a year. That's it. This is for the analysis of 1 year. Timely, the fundamentals would change and technicals would change. So my analysis for this is for time period of 1 year. And going forward, I would reevaluate things and then stay put in the company if it is safest bet or not. So balance sheet is also growing. So total assets and it's like 20x times. You can see the borrowings are also growing where the company is also growing. It as it is a infrastructure company, it needs a lot of money basically to put in. So it has to go to debt, and slowly it will using the toll gates and not only toll gates. It's like part of income for them. Slowly, where they get their money back, and as it is dealing with the governments, it takes time to get the money. But if you see the debtor days and inventory days, they are quite good for this company. Almost like 1.5 month is good actually. And cash flow, you can see the cash flow from operations is receivables are there, which is like they will be receiving the money for the long run. For receivables, they have to get it. So it's like they have to get almost 1,446 crores. And inventory, they gave around 127 crores, and payables they have to pay around yeah, they have paid almost like 515 crores. So overall, it's like working capital changes. So you can see the money, right? Like the sector it is in which it is like highly uh, money oriented. So they need capital, right? And the thing is they have to borrow, they have to invest, and then the amount which they have invested. So it comes from the governments over as time durations like phase one, phase two kind of a thing. They don't get money at a time. So that's fine for me. So if you see the financing, borrowings are also growing and repayment is also growing. If you see, okay, interest paid is growing. That is very concerning for me because let's say the company is almost zero debt free. Then this goes into here. So repayment of borrowings and at the end of the day, profits would be retained with the company itself. But the construction companies don't work like that. So this has to be accepted basically. Mm. So if you see the shareholding pattern, promoters are consistently holding their share, but FIS has increased and DI is also increased. So they have confidence in the company basically. Big investors are investing. Uh, so like our retail investors has generally don't have that patience, right? So we do sell off if we get almost like 50 60% or 100%, we do sell off, right? So public has reduced their debt. I mean, sorry, reduced their share in the on this stock. As big investors are concentrated in this company, this would become safest bet for me. Yeah. So overall, the company looks fine to me. For the short term investment, so the safest levels would be around 240, 242, 260. Yeah, that's it from my side. You can add your inputs in the comment section. Thank you.